Hey guys, this is a market update. Major things happening in markets right now. Bitcoin and crypto are responding to this, and let's talk about that in this video. We have just flipped a major resistance level at 25,000. You can see we've been in this formation for almost a year now, almost 12 months in this bear market low, trying to find a low price. All of the FUD, we've had, Celsius and 3AC and all these blow ups. And then the last ditch attempt right here from the bears, which is FTX, of course. But as you can see, this major resistance has now been flipped. We came into this 25K level on kind of a dead cat bounce in the bear market. We tried to go through it a couple of weeks ago. We failed that, came down with the banks blow ups, but obviously the Fed have stepped in now and asset prices are of course responding to that. Bonds up, stocks up, especially in the NASDAQ, and Bitcoin and crypto as well. We have now flipped this 25K resistance. Let's just zoom in here because this is important. You can see we got rejected off this a couple of weeks ago. So that is definite weak price action into that resistance, and then the banks blow up and we come down. But the Fed have stepped in and we had a rejection of this price again. You can see this candlestick with the wick of the candle getting reject, right? So that's, rejection of the price. We stayed right on this resistance level for a day, and then we just broken through it with two green candles. This is a very important level at 25 because of what the volume tells us as well, which I'll get into. If you are a trader, check out Bybit, link in description to a deposit bonus there. Come and trade with me on Bybit, up to $4,000 deposit bonus if you are a trader. So check the details via that link. As we can see, why this is important, in my opinion anyway, is because of volume that's traded around levels. So we have completely broken through this volume range right here, this consolidation, massive consolidation here. And now we don't really have a lot of trade up until this level. If the Fed is really stepping in here and markets are going to continue to rally, and we're seeing, European banks like Credit Suisse basically bailed out from the government there with a massive loan, that's liquidity into the system. And when liquidity flows into the system, Bitcoin does react to that. We have another major resistance level at 30. You can see this one support here, two support, and then we tried support here in the bear market, failed it miserably. It looks to me, look at the strength of this price action. It looks to me, considering that there isn't a lot of trade around here, we may very quickly go up to 30K if liquidity starts pouring into the markets again. So a lot of people are looking at this. Just to give you price levels here from the 25K, it is a major resistance level, as you can see. But if we are actually going to break through that, the next level 30,000 for the volume chart anyway, we do have prices here that would act as resistance as well if you're looking up. But you can see that's right at 30,000. If we look across, that's right at 30,000. So if we are going to have a bullish impulse here with the Fed pouring more money into the banks in the States, at least that's what they're telling us they're doing, then that would definitely be a midterm target around this price level. Why everyone's getting excited is because the Fed's balance sheet is expanding again. Let's look at this. As we can see, the Fed's balance sheet is essentially through QE since 2008, just getting larger and larger. And obviously that debases currency and just brings the price of all assets up. Bonds up, stock market up, Bitcoin and crypto are obviously going up because of that debasement of the currency through QE as well. Now, a lot of people are saying, well, the Fed's new program is not quantitative easing really because they're not doing it to stimulate demand. They're actually doing it from a defensive position because all the banks were essentially going bust and insolvent. So either way, it doesn't matter if your intention is one way or another, you are increasing liquidity again. Now, what happened the last time Fed increased liquidity, you can see that with COVID right here, and Bitcoin 10 to 15x'd off the back of that. Are we going to get this again? I think we're in a different environment. Again, the government themselves are not stimulating. I think a lot of what happened with Bitcoin as well is because you had fiscal stimulus, the government literally putting money in people's bank accounts to tell them to, hey, you can spend this. That's not going to happen this time. This is more just interbank liquidity, but it certainly is increasing the Fed's balance sheet. As you can see here, they've tried quantitative tightening, tried to roll off their balance sheet. That's just ended literally overnight, right? So that's not happening anymore. And so that is obviously a big change in markets. And when you get more liquidity and bond prices rise, asset prices rise, and of course, Bitcoin is going to respond to that as well. No, this isn't QE specifically, and it certainly isn't fiscal stimulus from the government like we had in 2020 during the pandemic. In fact, with banks now going through a crisis that hasn't finished, what you may see is a reduction in credit from those banks, which could also lead on to a weaker economic figures. And so we may be in a kind of scenario here where the Fed is increasing liquidity in banks because they have to, but then those banks are also reducing the credit that they give to customers, which could have negative effects on GDP and employment. And then obviously you get that recession. So there's a lot to play out here that we can't really predict right now. But what we do know for certain is that liquidity is flowing back into banks and the Fed's balance sheet is growing. And usually that's positive for Bitcoin, crypto, and tech. You can see this is the balance sheet of the G4. The biggest economies: Bank of China, Bank of Japan, Fed, BOE, ECB. And this is QE, which this isn't right now, but it's the similar effect, right? So as you can see, as balance sheets expand and QE is performed, asset prices rise because of the debasement of currency. If we can just see what Raul says here, he says, since then, QE has worked perfectly. You debase the currency via QE and prices rise instantly. He's actually saying that this won't be a redux of 2008, because 2008, they essentially let all the asset prices fall too far and it was a spiral down. They have stepped in immediately at this point and not let that happen. And so with the Fed's balance sheet increasing again, getting larger, they're flooding the banking system, at least, with QE. That is not what's going on now. As the Fed balance sheet rises quickly in a financial crisis, the collateral prices begin to rise. And that's what we've seen with BTC reacting, very sharply as well to this. This isn't going to stop anytime soon. And so obviously the bulls have the narrative at the moment. We also know Bitcoin and crypto respond very favorably to extra or excess liquidity. And when liquidity is being pumped in the system, the States is now doing that. Europe, at least in Switzerland and with Credit Suisse, are doing that. And China has been doing it for around 3-4 months as they try to stimulate their economy. So when the facts change, we have to change what we think about the market as well, because during the last 12 months, it's been reduction in liquidity, quantitative tightening. That is not happening anymore. There still may be a recession because of the banking crisis. That's unpredictable. Liquidity is very easy to see. As we can see, this is global M2 and total crypto market cap. So you can see they're intertwined. As global M2 rises and falls, so do the prices of these risk assets. And we are going from a bear market bottom in M2, probably going out the other side. Is that going to affect inflation? Yes, it also could. But if credit creation from banks reduces, then potentially that will be deflationary as well. So that's very unpredictable about what can happen. But it's not necessarily that just because they're flooding the system, we get this high inflation again, because it's not fiscal stimulus. And also you may get a lag effect from the banks creating less credit. So very unpredictable. But as we can see, we're at this bear market bottom for M2 creation, which I've been saying for 6 months right now. And as we can see, liquidity is up large. When liquidity increases, gets flooded into the system, we know Bitcoin reacts to that. Markets are very uncertain right now. You have a potential credit crunch from banks that could spark a reduction in GDP and a recession, potentially rising unemployment. The Fed is still raising rates, but that rising unemployment could get them to cut rates, which is usually bearish for the stock market. But generally, the narrative has changed right now into, Fed and other central banks potentially trying to avert crisis and flood the system with money. This is not going to stop for a while as well. So the narrative has changed. And I gave you the price levels that I'd be looking at anyway. If you are a trader, Bybit, link in description for a deposit bonus there as well. Come trade with me on there via that link. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.